Let me tell you about two people. Person A had £500 sitting in their bank account in 2010. They thought, it's not enough to invest. What's the point? So they left it in a savings account. Person B also had £500 in 2010. They invested it into a simple index fund inside a stocks and shares ISA. Then they added just £100 a month, that's roughly £3 a day, and didn't touch it. Today, Person A has around £620. Their savings account did its job. Barely. Today, Person B has over £27,000. Same starting point, same country, same economy. The only difference, one person knew what to do with £500. The other didn't. I made this video so you never have to be Person A again. Stick with me for the next 10 minutes, because by the end of this video, you will know exactly how to start investing in the UK today, even if you've never invested a single penny in your life. Let's go. Welcome back. And if you're joining us for the first time, welcome to the channel. My name is Mark, and this channel exists for one reason: to help everyday people in the UK understand money, build wealth, and stop being kept in the dark about the financial tools that are available to them. If yesterday's video on stocks and shares ISAs got you thinking, this is the natural next step. Today, we're getting practical. We're answering the question that I get asked more than any other. I don't have much money. Can I actually start investing? And the answer is yes. Absolutely yes. And I'm going to show you exactly how. Here's what we're covering today. Why £500 is genuinely enough to start, the biggest mental barriers that stop people from investing, the exact steps to take your first £500 and invest it in the UK, what to actually invest in as a complete beginner, and the one thing that will make or break your results long term. Subscribe and hit the bell if you haven't already. We're uploading every single day this month, and you do not want to miss what's coming. Let's get into it. Before we talk about the how, I need to address the thing that's probably been holding you back. Because if it wasn't holding you back, you'd already be investing, and you wouldn't be watching this video. The lie is this: you need a lot of money to start investing. This belief is everywhere. It's in the way the media talks about investing. It's always about hedge funds, millionaires, and stock market crashes affecting people's portfolios worth hundreds of thousands. Ordinary people watching that think, that's not for me. But here's the reality. You can open a stocks and shares ISA in the UK and start investing for as little as £1. Platforms like Trading 212 and Vanguard have no minimum investment requirement at all. £500 isn't just enough to start. It's genuinely a great starting point. Because here's what people miss. It's not the size of your first investment that determines your outcome. It's the habit. It's the consistency. It's the decision to start. The person who starts with £500 today and contributes £100 a month will almost always end up wealthier than the person who waits until they have £5,000. Because by the time they feel ready, the person who started has already been compounding for years. Time is the most valuable asset in investing, and you're spending it right now, whether you're in the market or not. Right, let's get practical. Step 1. Before you invest a single penny, I want you to make sure your £500 is the right £500. What I mean by that is this. Money you invest in the stock market should be money you don't need in the next 3 to 5 years minimum. Markets go up and down. And if you invest £500 today and the market drops 20% next month, you need to be able to leave it alone and let it recover. That's how investing works. So before you invest, make sure you have a small emergency fund set aside. Even just 1 month's worth of essential expenses, rent, food, bills, kept in an easy access savings account. That's your financial safety net. Once that's covered, your £500 is ready to be put to work. Now, I also want to be upfront about something. Investing always involves risk. The value of your investments can go down as well as up. You could get back less than you put in. Past performance does not guarantee future results. But here's the context. Over every rolling 10-year period in the history of the UK and US stock markets, the market has always ended up higher than it started. Not every individual year, but over time, the trajectory is upward. That's why we invest for the long term. Keep that in mind as we go through the steps. Step 2. You need somewhere to invest. And in the UK, that means choosing an investment platform. Now, I'm going to keep this simple because there are a lot of options and I don't want to overwhelm you. For a beginner investing £500, I'd recommend looking at 3 platforms specifically. First, Vanguard. This is probably the most well-known name in low-cost index fund investing globally. Their platform is clean, simple, and charges a low annual fee of around 0.15%. It's brilliant for long-term, hands-off investors. The minimum to get started is £500, which fits perfectly for today's video. Second, Trading 212. This is a great option if you want to start with less than £500, or if you want the ability to invest in individual stocks as well as funds. It has no platform fee, which is a big plus. You can start with as little as £1. Third, Hargreaves Lansdown. This is the most well-established UK investment platform, used by millions of Brits. It has a wider range of investments than the others, but slightly higher fees. Worth considering as you grow your portfolio. For a complete beginner today, my personal recommendation would be Vanguard or Trading 212 to keep things simple and low cost. I'll be doing a full dedicated comparison video on the best UK investment platforms very soon. So subscribe so you don't miss that one. Once you've picked your platform, open your Stocks and Shares ISA. You'll need your national insurance number and a form of photo ID. Most platforms complete the process in under 15 minutes. This is the question I get asked the most. Okay, I've got my account, I've got my £500. What do I actually buy? And here is my honest answer for a complete beginner. Don't try to pick individual stocks. Not yet. I know that sounds boring. Everyone wants to find the next big company and ride it to the moon. But the reality is that even professional fund managers, people who do this full-time with teams of analysts and billions of pounds, fail to consistently beat the market over the long term. So the idea that a beginner can consistently pick winning stocks is, statistically speaking, not realistic. Instead, the most proven strategy for long-term beginner investors is index fund investing. Here's what that means. An index fund is a type of investment that tracks a particular stock market index. For example, the FTSE 100, which is the top 100 companies listed on the London Stock Exchange, or the S&P 500, which tracks the 500 largest companies in America. When you invest in an index fund, you're not betting on one company. You're buying a tiny slice of hundreds or thousands of companies all at once. So if one company in the fund performs badly, it barely affects your overall investment. For a UK investor starting out today, 2 options I'd suggest looking at are a global index fund, something like the Vanguard FTSE All-World ETF, which gives you exposure to companies across the entire globe, or a straightforward S&P 500 index fund, which tracks the 500 largest US companies. These funds have historically delivered strong long-term returns, they're incredibly well diversified, and the annual management fees are very low, often less than 0.25% per year. That's it. Pick one of these, put your £500 in, and you're an investor. Here's the part of this video that I genuinely believe is the most important, and most people skip over it. Investing your initial £500 is brilliant, but it's what you do after that which actually determines whether you build serious wealth or not. The answer is a monthly direct debit. Set up a recurring investment, even if it's just £25, £50, or £100 a month, that automatically goes from your bank account into your ISA and gets invested the same day every month. This is called pound cost averaging. By investing a fixed amount every month, regardless of whether the market is up or down, you naturally buy more shares when prices are low and fewer when prices are high. Over time, this smooths out the volatility and generally leads to better average returns than trying to time the market. And psychologically, it removes all the stress. You're not sitting there every month wondering whether now is a good time to invest. The direct debit just goes out. It becomes as automatic as paying your phone bill. Let me show you just how powerful this is with real numbers. If you invest your initial £500 today and then add just £100 a month, that's £1,200 a year. At an average return of 8% per year, after 15 years you'll have approximately £36,000. You only contributed around £18,500 of your own money. The rest, nearly £18,000 came purely from compound growth. After 25 years, you'd be sitting on over £96,000 from 100 a month. That's not magic, that's maths. And it's available to every single person watching this video right now. Before we wrap up, I want to leave you with 5 rules that every beginner investor in the UK should have tattooed on their brain, metaphorically speaking. Rule 1. Start before you feel ready. Nobody ever feels completely ready. The market will always feel uncertain. Start anyway. Rule 2. Invest for the long term. If you're planning to use this money within the next 2 or 3 years, keep it in a savings account. The stock market is for money you can leave alone for 5 years or more. Rule 3. Never invest money you can't afford to lose. Markets can drop significantly in the short term. Only invest what you're genuinely comfortable leaving alone through the bad periods as well as the good. Rule 4. Don't check your portfolio every day. This is one of the most damaging habits a beginner investor can develop. Watching your portfolio fluctuate daily will tempt you to make emotional decisions, selling when the market drops, chasing gains when it rises. Both of those behaviors destroy returns. Check it monthly at most. Quarterly is even better. Rule 5. Keep your costs low. A fund that charges 1.5% per year in fees will eat a huge chunk of your returns over decades. Stick to low-cost index funds with annual charges under 0.25% wherever possible. So there it is. Everything you need to know to start investing in the UK with just £500. To recap what we covered today, your £500 is absolutely enough to start. The most important thing is to begin. Choose a simple, low-cost platform like Vanguard or Trading 212. Open a stocks and shares ISA. Invest in a global index fund. Set up a monthly direct debit, and then leave it alone. That's the whole strategy. It's not complicated, it's not glamorous, but it works. And it has worked for millions of people over decades. The only thing standing between you and financial freedom is the decision to start. If this video helped you, please give it a thumbs up right now. It costs you nothing, and it genuinely helps this channel reach more people who need to hear this. Drop a comment below. Tell me, are you going to invest your first £500 this week? Or if you're already investing, how did you get started? I read every single comment and reply to as many as I can. Tomorrow on this channel, we're talking about how to claim money back from HMRC that you're probably already owed. Hundreds of thousands of people in the UK are sitting on unclaimed tax refunds and have no idea. Don't miss that one. Subscribe, hit the bell, and I'll see you tomorrow.